Hello and welcome to Tracking Trends with me, Nikunj Dalmia, a show on which we will debate, deliberate, ideate and perhaps talk about trends which are going to be market moving in nature. Trends which you can understand, implement and where you can actually make money. The idea of the show is that we always believe that there is a bull market on somewhere. Our job is just to help you identify that bull market. And the bull market in India is getting bigger. Now, the underperforming large cap stocks have also jumped on the bandwagon. Today Nifty has touched a new high and it has taken almost 5 months of consolidation for Indian markets to regain its new high. Now that's the global setup for you in dollar terms. You always look at market in dollar terms. Now we may feel very excited about the fact that Indian markets are at a new high, but in dollar terms actually India has done, well, it's not even in the top quartile. Nasdaq has given 36% return, S&P, which is the benchmark of US market, 19%, European market 16% and Dow about 9%. Of course, China and Hong Kong, they've had their own problems and that explains why they've actually not done rather well. Now, what is the way forward? And that is what it needs to be understood. Now, are we in for a last hurrah before the year ends? Are we in for some wild profit booking before the year ends? Now to establish that, let's look at the factors. What could be the concerns in the month of December? Well, by Monday, markets would have adjusted to the outcome of state elections. Inflation, which was scary, is looking toppy. Interest rates, which were moving higher, now they are peaking out. Earnings season, well, that's behind us. So are we in for a last hurrah in the month of December? Looking at the positioning of the market that large cap stocks are rallying later than mid and small cap stocks, there is a case which could be made. That's the previous high for Nifty and this is where we are. Now, first let's establish that what has taken the market, and when the market comeback has been from 15th of September to let's say first week of December, what has really aided to the market? So between the previous high versus this high, what has changed for the market? And very interesting set of stocks have actually made a comeback. Unusual surprise, autos. Unusual move, I would say oil marketing companies. But the real chunky move, I think, in last quarter, if I say from September to now, actually has come in autos. Then within the mid-cap space, exchanges. Who would have thought that BSE would actually give you 100% return? Yes, it has. In less than 6 months, BSE is up substantially. Those are some of the mid-cap gainers, which includes real estate, power finance, REC. What phenomenal moves there. And within the small cap space, BSE, MCX and Suzlon, they've given you great returns. So it's been a quarter where irrespective of what you actually were holding, you've been smartly rewarded as long as you did not panic and you did not sell. Now, what is the way ahead? What are the December returns? And this is where I think the seasonality kicks in. If data is anything to go by, the market returns in the month of December are actually more positive than negative. One looks at 2020, 2021, 2022. The hit rate of Nifty in last 10 years, 60% for the Nifty, 70% for the mid-cap index and 80% for the large cap. So are we in for more of the same, which is that the seasonality in the month of December continue? Let's take that conversation forward with our technical experts, Kunal and Nuresh. And Kunal, I'll turn to you. In the month of May, sell and go away. It did not work this time. But will the Santa Claus rally, which historically has happened, that data which you have, 60% time in Nifty, 17 mid-cap, small cap, will history repeat itself? Because these are very fat numbers, Kunal.
And I think it's an excellent understanding in terms of how the setup is. And what I've looked at the charts, Nikunj, is how the global setup has panned out over the last 1 month. And it's been a fabulous bull market rally across various asset classes. So we look at equities and we predominantly look at the US indices, Nasdaq, Dow Jones, even S&P has given similar returns of more than 10%, 12% broadly. European markets, DAC, CAC, FTSE, I think all three of the indices have also given double-digit returns, 9% to 10% broadly for the indices. Asian markets, as you rightly mentioned, many of them are starting to show signs of pickup. Nikkei, in fact, is perched at a multi-year high, but it's on the verge of doing that. Nifty's already done that today, making a fresh high for itself. Then the other asset classes, that whether the equities is the only asset class which is done reasonably well. In fact, bullions, you have likes of gold and silver, which have made a dramatic comeback in the last 1.5 odd month, giving returns of more than 12%, 21% respectively. And cryptos, Bitcoin has also done exceptionally well. from the October lows from 26,000 odd to now 37,000, 38,000 levels for itself. And on the other hand, just to end up, dollar index and crude oil, both these asset classes have gone through a correction for themselves. So this indicates that this is a full-fledged global bull market which is at play. So yes, you can call it as a Santa Claus rally.
Okay. Naresh, if history is anything to go by, December has been rewarding. But if the trend in 2023 is anything to go by, historical trends in 2023 have got challenged. The selling in May did not happen. The comeback in June was unreal. The stability in the month of October, we've seen it like never before. So our market's looking different. Our market's acting differently.
So the seasonality is a little tough to look at because it is not necessary that things happen exactly the same way every time. So there is also a cyclicality that January first week tops are tough ones to actually cross. So if you go back to all the years, some of the major tops, whether it is 2008 or 2018 or 2011 or say even 2015 have happened in January. So generally fresh inflows are supposed to come in January, and that is where it tends to top out in terms of foreign flows. But overall, what is interesting at current point of time is the structure of the global indices. Irrespective of the various announcements and things happening around the world, you look at various indices, you have Nikkei trying to make a new 52-week high and a multi-year high. You have DAX, which is 1% away from an all-time high. You have Dow Jones yesterday hit a new 52-week high. You have S&P 500 in touching distance of a 52-week high. And both these indices are not far away from their all-time highs. Similarly, in India, we've hit new highs on Nifty 50, but we've already been hitting new highs on the broader market, the Nifty 500 and the Nifty 50 equal weight, etc. So the trend is strong, and we have started to see some of the large caps make a move. So we are seeing some leadership coming back in a ICICI Bank and a Reliance Industries. So overall, the structure is positive. We could get overbought around 20,500 odd levels. So one has to be on the lookout of a pause going forward. You're riding onto the trend, keep a trailing stop loss. At higher levels, you want to reduce leverage rather than to make leverage.
Okay, so the point we're trying to perhaps bring out is very simple. That the market have rallied because of the global construct. While we may talk about India, but the real bottom line here is that global markets have rallied. From the October low, yields, 10-year paper, crude, FIs selling, everything in a sense has got reduced. So this is like a global denominated market, and if anything has to be looked at, look at crude. 15% off from the high, dollar index 4% off from the high, yield has come down from 5% 10-year paper to about 4.6, 4.7 on last count. And at the same time, it's a global rising tide phenomenon. So anything happens locally, which is that if Indian markets correct and if global markets are intact, you should be a buyer. As of now, global markets have not corrected. But if global markets correct, well, we can revisit our thesis. But so far, it looks that we are in for a strong, session, so to speak, in terms of the market action. Kunal, that's the sum and summary, right?
Absolutely good. So again, I think in terms of event where many traders are trying to lighten up the positions, or maybe there's a FOMO effect that maybe you missed out on the good part of the rally, and let's wait out for the events to play out. I believe that this could actually be a good time in case if there is any kind of a small dip. I think one should be looking to buy that.
Now here are some opinions from A. Bala and from Dinshaw Irani on today's new high on the Nifty and what it means.
I still believe that, there's again a clamor that large caps will outperform mid caps, small caps. I honestly don't know how that will go, but I still think mid caps, small caps is the place to be. That universe is expanding and that's the place to be. So don't be deterred by the up move that we've seen in the last 6 months and therefore say, okay, mid caps, small caps have gone up. So don't be in them. I still think bottom up, mid cap, small cap, emerging growth opportunities is the place to be. And there are several sectors. I still think that while, there are talks of a recession in the US, but tier 2 IT companies will still do well. Some of the online businesses will do well. We've seen a couple of listings of late. I think that's clearly the space to be. That's the space which will outperform. We think this is going to be not just India's decade, but India's decade. Just be overweight on several mid-tier technology services companies and a lot of India-centric online businesses. these are going to be the big compounders and the big wealth creators. And I think investors need to focus on that segment increasingly, notwithstanding the fact that prices have moved up over the last maybe couple of quarters.
And a tip is always a tip, the best tip that one can get, given the fact people have been participating thanks to the SIP. The more you don't look at how the investment is going to perform, rather how the market is going to perform and how the economy is going to perform, but still continue to make your investment through the SIP. I think that's the best way I think one can build their portfolio. In fact, I'm quite happy that the whole system is revolving around SIP way of investing in the mutual funds market, which actually is a good news from the sustainability of the overall flows, as well as the experience that investors can get will be far superior, which I think I see it as a big. Therefore, SIP will always remain the best tip that one can get.
You see the index, the way it has performed, mid-cap and small-cap, it's up 36, 37 odd percent year to date, which obviously is, and look at the gap. I mean, if you look at the Nifty, the larger cap index, I think it's up around 12 odd percent or so from year to date I'm talking about. So obviously that gap is too huge. Normally when you see these kind of gaps, and actually the valuations also have gone out of whack. I mean, if you see the difference between the two valuations, I think from a regular basis, if you look at the 10-year averages, we are some 1.5 standard deviation away on that matter. So obviously there's some stretch happening on the stocks within the index. Unfortunately, in the mid-cap space, there's only 150 stocks to play with, right? And fortunately, in the small cap space, anything beyond 250 is small cap. So you still get some pockets of value within the small caps. We're looking at a Santa Claus rally going ahead. So you'll see large caps really participating in this one. That's what our feel also is out here.
Well, while today we are talking about how autos have handsomely contributed to the market, but bottom line here is that it's that time of the year when you will have to look at discounts. After having a bumper festival season, automakers are looking at a tough December month with pressure on sales quite visible. As a result, both car makers and two-wheeler makers are offering heavy discounts to avoid pile-up of inventory. My colleague Sumit Chaturvedi joins us with more details as to where the inventory levels actually could lead to discounts. And the discount could be a phenomenon that, साल के एंड में ले लो, डिस्काउंट मिलेगा, नहीं तो ईयर एंड के बाद मॉडल की वैल्यू कम हो जाएगी. That's the broad thought which I guess most of the December sales are done, that if you are okay to buy a car in the month of December, the advantage is you will get a discount. The disadvantage is that the make year changes the minute the 1st of Jan next year clock kicks in. So Sumit's got details as to what we should expect in terms of discounts.
After having a good month in November, well, car makers and two-wheeler players both are having a problem in December because of high inventory. So discounts are going to be good. As per the recent trends, discounts of as high as 1 lakh rupees are on cards, including Maruti Suzuki's this year's launch, big launch called Jimny, 1 lakh rupees discount on this. It's a big one. Then Baleno discount up to 60,000. Also discount of 25,000 on Kia sedan. That's Maruti. On Hyundai, up to 20 to 30,000 discount on Verna, i10 Nios and Aura. Tata Motors Tigor, 20,000 discount. MG Motors, Mahindra and Mahindra all are given good discounts this month. Two-wheeler players also giving 10,000 to 15,000 discount from Hero Moto to TVS to Bajaj Auto. So clearly a very good month for discounts ranging from a few thousand rupees to a lakh rupees on both two-wheeler and four-wheeler players.
All right, now time for your queries, and we're very thankful that we're getting like a bunch of queries. And the first query of your query is that with markets at a fresh high, can one still look at investing in the market? Should one wait for a correction to fundamentally enter sound companies? And if yes, which stocks and themes should one like? Now that's a very loaded question. With a fresh high, should you enter the market? Well, that depends on your time frame. If your time frame is 3 to 6 months, well, then you have to fasten your seatbelts for volatility, because 3 to 6 months market would be difficult to call given that there is an election cycle. If your time frame is 1 to 3 years, you should expect double-digit returns from here in large cap stocks, because the value of the market right now in terms of the P multiple is cheap. Your 5-year plus return, by the time the cycle would have played out itself, a lot of small cap stocks and mid cap stocks would have also gone through time-wise correction and a new cycle would have started. So 3 to 5 year, if you have a genuine time frame, I think it's a good idea to look at stocks. Just to give you a very neat summary of what I've learned over the years is 90% of Indians, when they are in stock markets, their time frame is less than 1 year. 90% of Indians have time frame for less than 1 year. 5% of Indians, and this is data what we get from brokerages, have time frame of 1 to 3 years. But the real money is always made if you are in that category which thinks 5-year plus and could really be the minority category, because that's the category which believes in buy and hold, and that's how money is being made. Second part of the question, wait for the correction to buy fundamentally strong companies. Well, that depends on your time frame. And if one has to invest, which are the stock and themes to look at? Now that loaded question, I've given my sense. Now let's go to Sanjiv. Sanjiv, from Abhishek, first part of the question, when markets at a fresh high, should one enter? Part 1 of the question.
So, good afternoon. Nikunj, like you said, it depends on your time horizon and your goal. Are you there for the short term or are you looking for a longer term where you are buying a business and sitting over it over a period of time? If your duration is long term, then there is no such thing as timing the event or fresh high or fresh low. It is what your investment thesis is and how you want a return over a period of time. So two things: chart out your goal and your horizon, how long you hold it. There is no such thing as new highs. There are some stocks which are not done anything. So it's a lot of opportunity, and that's why you have to be in the market to make money. So I still think there is time to go up and there is a stock specific movement going around. But the index, which has done nothing, is now on the verge of a much higher move. And that is why we think large caps and select mid caps can do very, very well.
In equity markets, longer your time frame is, better it is in terms of getting good returns. If your time frame is more than 10 years, your chances of losing money in the stock market, I'm talking the index here, is actually less than 10%. Second part of the question, Sanjiv, which stocks or themes can one look at?
So the themes have been very clear. The PSUs have done well, the consumer stocks have done well, and pharma. But here I would like to say two stocks which I would personally think are very, very well endowed in their value, and they have a lot of created. First is Tata Communication. I think Tata Communication from the house of Tatas is the largest integrated player on the communication side, and their underground cables and distribution is doing extremely well. So Tata Communication from the house of Tatas would be a very, very good pick around this 1660, 1670. I think that can be a 20% gainer over a period of time. And if your horizon is more, this stock can actually trend higher. The other pick would be, since we are seeing a lot of global trade and Baltic Freight Index doing well, Adani Port is a stock which has done nothing much, but the valuation and the performance of the company is extremely good. So at 820, 830, I think that becomes a very good index play and also play on the macros globally. India, as you know, Adani is, I think, one of the best ports in the world. And given that freight is starting to move up, I think traffic and freight will add to its color. Its volumes have been the highest in the last 20 years. And I think Adani Port fits the bill perfectly for a 20% upside over the next 1 year.
Second question is from Smita Jain. What is a better idea, auto or auto ancillary?
Take both of them, buy the best of both of them, buy a Tata Motor and a Bosch if you have longer term horizon. If your horizon is shorter term, then Ashok Leland and Apollo Tyre fit the bill perfectly.
With the exception of, let's say, Bosch and MRF, one would say that not too many auto ancillary companies have been great compounders. Very few auto ancillary companies have really created the kind of wealth what some of the auto companies have created. So some would argue and say that buying auto ancillary is always a challenge because then you're dependent on the OEMs. Sanjiv?
Well, yes and no, Nikunj. And as if the commodity cycle remains where it is, then the end users are doing extremely well. So I continue to think pedigree names at the time when the index is at highs, it is better to be with pedigree names. If you can digest the volatility, then take some of the ones which are, maybe have been lukewarm performers. But like we said, the cycle has turned. Tires and the OEM business, as far as Bosch goes, which is the complete play, are the best plays. So both of them go hand in hand. And like you said, I would say buy half of one and half of the other.
50-50 करने बोल रहे हैं भसीन साहब. Okay, 50-50 rule I guess always works. Keep it very simple. If you get 50% right, well you made money. And if you get it wrong, well you'll only lose 50%. So 50-50 rule, Sanjiv साहब, hedging हो गई है तो.
बिल्कुल बिल्कुल थोड़ा सा spread your egg so that Nikunj, you don't miss out on both, and you have both of the baskets which have been the best performing in this particular year.
Fantastic, as always, to have you on ET Now. Well, that's the idea of the show, that we get you ideas, advice. We can, connect some dots for you. We would like to share our experience. I will share my personal anecdotes. This show is all about connecting the trends. Please send us your queries. The WhatsApp number is there on your screen. I would urge you to just pick up the phone, send us a query, and then we'll get it answered by our experts. Before we wrap, here's also an excerpt of my conversation with the great master chef Sanjiv Kapoor on our show Khane Pe Charcha. And it was indeed a privilege to sit down with him and understand that how he is really from a chef to an entrepreneur. And what is remarkable about Mr. Kapoor's journey is that he always has been ahead of the curve. Now, whether it was as a host of a television show, or perhaps getting his own digital platform going, getting his own food television channel, or now really walking the path of entrepreneurship when it comes to his brand Wonder Chef.
I think there are two things that are happening simultaneously in India. One is, world is coming closer, right? So that's where international foods are coming here much faster than ever. At the same time, there is this pride in Indianness that is happening. So what is that doing is that foods from parts, let's look at last 1 year. Millets. No one would have imagined that adoption of millets would have happened.
At a mass scale. Even FMCG companies now have dedicated millets.
I would give that credit to our Honorable Prime Minister, because he led it from the front.
Got the awareness out.
Yeah, I think the conversations that were created, actually any food for consumption to go up, conversations have to be created. More conversation, more consumption. So this newfound pride for Indianness is increasing consumption of little known Indian foods. जो पहले मतलब कि बाजरे की रोटी, रोटला, or things from interior, from villages, regional foods, or foods from northeast, people didn't know. That people are eating with pride. So, and both will move simultaneously. It's not कि एक रुकेगा दूसरा नहीं रुकेगा. So both will, and they may converge. And maybe 100, 200 years from now, there would be a cuisine which may have authentic or biryani.
Oh, wow. Pure fusion.
Because it's something that's how food evolves. So we didn't have tomatoes, we didn't have potatoes, we didn't have chilies. But tell anyone.
got potatoes and tomatoes and chilies.
So imagine somebody said कि अच्छा मिर्च के बिना इंडियन खाना ये हमारा authentic नहीं है. You'd laugh. But that's what the reality is. So that is how it will move. So in short term, it would be both these would move, and any destination where international की बात करो, Indian also, where conversations are more. Could be, let's say, could be a film is responsible for that. Could be shows are responsible, TV channel. Could be any reason. Because food, role of influencer is fairly large.